Good morning, ladies and gentlemen. Welcome to the Flow Show. Lots going on once again this morning. Lots of price moves. The dollar still rampant. So we'll get into some of that. You have to excuse me if I pause now and again. I've got my eye on the trading screen because I've got a few bits and bobs on, particularly trying to give euro dollar a go down here into my big 105 level. So if I have to hop off to jump on my trading screen, please excuse me, but yeah, my trading comes first. Right, meanwhile, other news. The PBOC looks like it's just starting to fight some of these moves that we've got going on. Their fixes are coming in at 7.19, staying around that 719, just sub 720. That's even while we're seeing dollar China moving higher. So they're just indicating that they don't want this to be running up too far and too fast in the CNY. So they've still got a bit of room over these fixes, 2%, but when they indicate fixes at a certain level, it just potentially puts the brakes on. So maybe we are getting to that point where enough is enough. I'm still eyeing the 728s area to maybe start putting on some shorts, so we're not far off that. I may start there, or I may see if it goes through and add a bit further. The dollar is a wrecking ball at the moment. Over in Japan, the Japanese government, what's left of it, is considering restarting its electric gas price subsidies from January and continuing it through March. This has been an ongoing theme in keeping prices reduced for consumers, and they're going to be continuing that far longer than a lot of other countries have had to. Over in Australia, RBA's Bullock says they think we are restrictive enough and will stay there until they are confident on inflation. We did get Aussie jobs overnight, and this one was a bit similar to the Canadian jobs we got last week, where it was, well, not much of anything really. Was expected to come in at 25.2, missed expectations, but not by a whole deal. Unemployment rate stayed unchanged at 4.1. The participation rate came down a pip, 67.1. So a reasonable jobs report. It's a positive one. That's no big negatives in that, and the Aussie labour market still remains fairly strong over there. Over at the BOE, and Mann was speaking again, saying it's better for the bank to lean against the risk that inflation is higher than expected than to wait and see. So she wants to keep action potentially in the back pocket. ECB's VP de Guindos says that indicators are going in the right direction. We've got a bit more data out of Europe as well. Sweden's CPI coming in pretty much unchanged. CPI 1.6%, CPIF, this thing they look at, also unchanged, 1.5%. I'm not sure about the prior here, because other calendars are reporting the prior at 1.5%, unless there's been a revision I don't know about. So otherwise, it all came in line. Same for Spain. Numbers there confirming what was expected, so bang on the money for that. Core CPI 2.5%. A lot of these Eurozone numbers are finals as well. We've got Eurozone industrial production coming in much softer than expected. No surprises there. Not even Spain can help lift this lot up. It's been doing one of the best out of all the Eurozone countries. We also got a revised, or the first revision for Q3 GDP. That was all unchanged, so nothing going on there. Moving on. Employment as well, that posted for the quarter up 2 pips, 0.8%, came in as expected on the quarter, 0.2%. So that was that from the data front. Coming back to yesterday's numbers in the US CPI was obviously the big deal yesterday, and numbers came in as expected, so confirming the rise in October over September of 2 pips to 2.6%. The core coming in unchanged. A lot of the metrics on the month coming in unchanged as well. Now, initially, the dollar sold off on these numbers, and they had to do a bit of digging to find out why. A lot of the inflation worries for the Fed and others is the services side of things, and there was a bit of softening in the services basket. So that's one of the reasons. That's the rents and owner occupied, this, that, and the other, shelter costs, and all the rest of it. So that those numbers did come down slightly. That looked to be why we got the reaction in the dollar that we did. Not that it lasted long. One of the other things I look at is this super core thing that came down month on month to 0.3 from 0.4, but it went up year on year to 4.37 from 4.26. And then you get everyone counting the 20 decimal places after and the rounding numbers. I won't bother you with that sort of rubbish. Part of the CPI data is also earnings data. And is it in here? No, it's not. Well, only the month-on-month number. But year-on-year real average hourly earnings rose 1.4% from a prior 1.5%. So a bit softening on the hourly earnings. On the weekly earnings, they went up to 1.4%. From 0.9%, although that was revised to 1.1%. So there was a gain on the weekly earnings, a little drop on the hourly earnings. So a bit mixed on those numbers. Right after the CPI data, cut bets for the December Fed meeting firmed a bit, about a 75% probability versus 60% before the inflation data. The old pendulum swinging once again. Personally, I don't think it changes anything for the Fed. Obviously, we're going to get, I think we're going to get another CPI report before we get to the December meeting. So it could all change again. On the yield front, Reuters ran a poll where economists expect 10-year note yields to fall to 4.25% in 3 months. Versus 3.8% in the prior poll. And in 6 months, they expect it to fall to 4.2% from 3.75% in the prior poll. So still pretty high anyway, playing a bit of catch up, those economists. Fed's Kashkari was out again. And as Mark pointed out in our chat room, not as strong on the CPI data as he was talking yesterday. Yesterday, he said higher CPI would potentially increase the case for a pause, or higher CPI before December would potentially increase the case for a pause. But then he sort of dialed things down a bit by saying that headline CPI confirms the path we are on. I'm not sure about that because it went up, unless he's confirming the up path. Anyway, he said he has confidence inflation is headed in the right direction. Again, it went up, so that's not the right direction. And he's not ready to say whether inflation is stuck above 2%. Fed's Logan had a little bit of a undovish comment saying that models show the Fed's funds rate could be very close to the neutral rate. Now, obviously, it's not a precursor that rates will stop at a neutral rate, but that's where they would like rates to stop. So saying that they might be very close to a neutral rate could be viewed as maybe not too many more cuts to come, and that the neutral rate is going to be maybe a bit higher than a lot of people expect. Then added that more rate cuts ahead, but uncertainty on the level of neutral rate. So countering our own comments there. Says officials should move with caution on rates. Fed's Mussolini said the overall US economy is strong. The outlook is favourable. October CPI data shows core inflation remains elevated. Gradual cuts are appropriate if inflation continues to decline. Fed Schmid said rate cuts show confidence inflation is on a path to the 2% target. And that's about it on the main headlines anyway. Not too much out on the geopolitics. Trump is still knocking together his cabinet, various members coming in and out. I think everyone's really waiting to see who is going to be coming in as Treasury Secretary. That's the big job. And I haven't seen anything more. Might have missed headlines, but Lighthizer remains in the frame. Particularly looks like Trump wants him, but they're yet to make a decision there. So that's going to be the big one. But for now, Trump's getting his cabinet together. More people that get in, then the sooner he can move towards putting in his policies. So we need to keep an eye on that. Right, let's have a look at what we've got coming up today quickly before we get stuck into the prices. We've got PPI today, which is sort of a dessert compared to what we got from CPI yesterday. So a bit more lagging the PPIs. So it will have a later influence in the CPI numbers, but we'll still look to see what it does. Core PPI expected to rise to 3% from 2.8%. Headline PPI also expected to climb to 2.8%. These PPI numbers can be a bit more volatile than CPI. Okay, so if it jumps to 2.7%, yeah, it'll be hot, but in the realms of volatility. Obviously, jobless claims is up as well, but that hasn't been flagging anything even through all the hurricanes and weather and whatnot. So we'll see if there's anything starting to show there for any other reasons. Right, what's going on? Oh, euro dollar's traded down to 105.01. We're tapping it. So let's go there. Now, I've been banging on about euro dollar 105, and just to let's get the right chart, just to show you why once more why this is such a big level is because of that. How far back this level goes. Okay, this is, I've got 3, 4, 5 levels here on my chart for euro dollar. These are the massive levels. Okay, there's a reason I have these levels on, because there's a lot of price action around them. You all knew about the 112. I shorted up there down to 110s, bought off 110s up to 112s. Unfortunately, I wasn't in a short of a 112 for all this move. That would have been a nice trade. But these are the reasons why I like these levels, because when they have action, then they can produce some big results. So I'm giving the 105 down here a go again, a bit like I did when we were down here this time last year, or earlier this time last year. I'm going against a trend. Okay, no ways about, no shadow of a doubt. I'm fighting the trend. But we've been discussing in the chat room about fighting trends. A lot of traders like to fight trends. They don't believe a trend can continue more than it does, and that's dangerous, because what you find is people step in and they try catching a knife, and before you know it, you've lost 4, 5, 6 trades. And when you do catch a winner, you've got to make all that back just to get to break even before you even start to make money. So you're already at a disadvantage. That's why I very rarely try and fight trends. And if I fight trends, I will try it at the levels I deem the strongest. So I don't mind losing 1 or 2, 3 trades maybe fighting a trend, but very rarely will I do more than that, because that's just more money I've got to make back after each loss. So I'll just limit. I'll sit on my hands. I don't care if it goes without me. I don't care if I'm not on the right side. Okay, I will wait until I get to a point where I'm most comfortable to trade, and that's where I'll trade. So I'm giving this one a go. Will it work? A multi-year level? Who knows? I don't know. You don't know. No one knows. We could blast through and head to 103. Okay, fine. I'll lose money on it if that's the case. But if I lose money here, I'm not going to touch it until I get to another decent level, or the market tells me we found a bottom. Okay, so forget trying to catch the knife multiple times. It's all right doing it a couple of times, but just remember, what you lose, you've got to make back first of all. So don't put yourself too much at a disadvantage. And the same thing with then trying to go with a trend. Okay, so people who have tried to catch a knife and they've lost, thought this is a bottom, this is a bottom, this is a bottom, and it hasn't worked. Now think, okay, I need to go the other way and go with a trend. So then they get a bounce 20, 30 pips up to maybe a minor level. And I think, okay, right, we've got a bounce. I'll try a short there. And then they find it keeps on going up. Why? Because of the speed and the size of the moves that's happened already. The harder and faster a pair moves, and as it moves, the greater the pullbacks and retraces are like when it does eventually find the bottom. So then people start getting short and thinking, oh, right, this bounce, I'm going to short it. And then it keeps going. Oh, right, I'll short it again. And then it keeps going. Okay, and then they end up getting flipped out both ways. They were wrong with the trend or going against the trend, and now they're wrong trying to fight with the trend. So if you're finding yourself getting in that sort of mindset, stop trading first and foremost. Okay, because your mind's not in the right way. You're fighting the market both ways. Okay, you want to be going with a market both ways or understanding what a market's doing. So you wait. If you want to sell a rally now, then pick your points. Pick the areas where it's going to be strongest. Okay, we've got little points here. You know, we had a bit of support into this 30 zone. Haven't tested it yet. We might get a bit of resistance there. Who knows? Okay, is that an area I'd look to short? Not at all. We've maybe got something here around 55, 50, 60 area. Okay, is that an area to short? Maybe. Okay, but you wouldn't go a huge trade. 5-10 pips above there, you're wrong. Okay, pick the stronger areas. This is more of a stronger area. 105.90, 106. It's an old level. Okay, it's an old fib level. It showed us over a couple of days where the levels were. That may be a potential area to try a short if you think this trend is continuing. Okay, but you don't need to be trying every 10 pips to short a rally just to try and get with the trend, because otherwise you do the same thing. You build up a series of losses and then you've got to hit a trade that gets that back first and foremost. Okay, so even if you have to wait for 107 to try and sell a rally, then sit back and wait for it. You know, pick the bigger, stronger levels. I don't know if this 105 is going to be strong enough. Who knows? But it's where I'm prepared to at least try and have a trade. It's where I'm going to lean my risk against. Now, if we do break here, then we potentially got a little bit of a line in the sand when we had this break last time. We were messing around here. This 105, we had that break, got down 50 odd pips before steaming right back up again. And so that's a bit of a line in the sand. If we're under 105, if we're going through 104.50, then, you know, we are heading for monster dollar rally territory. And where can we go from there? Well, you know, you can pick your points. 104s, even lower. And we're getting into, you know, multi-year areas where we haven't been for a long time. Okay, so just be very, very careful with that. It's almost looking, I don't know what the opposite of parabolic is when it's going down as opposed to going up, but you get the picture. It's a very, very sharp move. Okay, the sort of moves that we got here, very, very sharp moves when we came through 105 around what's this, 2022, when the Fed was ramping up hikes and inflation and whatnot. It was all kicking off. That's why we got this dollar strength. So there's every chance we could have a similar move down to these sorts of levels, but it will happen when it happens. If it happens, no one knows if it's going to happen. So don't be thinking, yeah, it's definitely going down here. Let the price tell you where it's going to go first of all. Yeah, I don't look at Dixie Mate. I know people do. Not for me, unless you're actually trading the Dixie futures contracts or, you know, a CFD, something like that. It's not something I look at. And most of it is made up of euro dollar anyway in the basket. So just use it as a bit of a weather vane of what's the dollar's doing generally, unless you're actually trading, as I say, the futures contracts or whatever. Yes, we do have Powell speaking later on. He's at a banking conference, if I'm not mistaken. So will he want to offer some comments on the market moves? If he does, he's going to be looking at things like yields, and they've been holding up, but they don't seem to be matching what we've been seeing in the dollar. We haven't had 2 years, getting back up towards the highs that we saw yesterday. Tens, they managed to nick a new high just by a couple of pips above here, a couple of points above that prior high that we got over the election. 450. This is really a biggie. This 450 level. Okay, and that's as we're showing, corresponding in the price down around close to 109. Okay, so if this goes, this could be a bit of a blow off moment. Okay, if we get down and yields break 450. So wherever we are in dollar at the moment, it could get a lot worse or a lot stronger for the dollar. So, keep saying it. People love to try and fight these things. Just let it go. Let it do what it wants to do. Okay. We could be on the verge of a monster dollar trend with Trump and everything else. The big change in presidency, a whole 180 flip we've got here in US politics and what that might mean. Does it mean the market may get too extreme and go too far? Of course. It's always the case, and it always usually happens. A market will go too far over what a Trump presidency means. But the proof of the pudding's in the eating. We don't know what his policies are going to be and how they're going to come out. So what we can do is just trade markets as we find them. We only trade what's in front of us. But yeah, keep an eye on yields. And if Powell wants to put a message in, then maybe you'll put that message in today, just to maybe say to markets, don't get too far ahead of yourselves in what you're doing with yields and the dollar. And that might help put the brakes on things a little bit. Dollar CAD, a lot of people watching dollar CAD, myself included. We had the break into 140 finally. Happened yesterday. I managed to jump on this move after the CPI data. As soon as the market hit that on those numbers, I couldn't hit my buy button fast enough. Because I was thinking all day, and you knew I've been saying this pretty much for the last 2 weeks. It was looking like it was inevitable that we were going to go and hit 140 at some point. There's nothing certain in trading, but when you've been doing this as long as I have, there's moments where things just look like a dead cert. I go back to when I've traded S&P off the 4,800 level. There's times when it just, the price action, the feeling, it just all builds up and you think this is going to that level, whatever happens. And we went now, but we're not out the woods yet. It's not looking as definitive a break or as clean a break as I would have liked it. I would have liked it just to, sail right up through 140, but it's knocked its head around 140.20. We had a little pullback, not too far under the figure. Now we're back above, can't quite get up to that high. And now we need to see what it does from here. So it's not a conclusive break just yet, although it is keeping the momentum. So, it has every chance to move on. Really, if you're looking to chase this one higher, you want to see 140 holding in the first instance. Potentially any one of these levels below, maybe this 109, 139, 75, 80 area. Your big level is down here. Okay, bit of a zone, 50s, 60s. Okay, if we come back to here and hold it, then that could be again a decent springboard to then go on and take it through the highs. If we're back under here though, it could spell potential problems for this break, and then it will begin to look like a fake out. So back below 139.50 and things may not look as hot. So it's not out the woods yet as far as this break goes, but if we get another test here, 140s, after this little low, it will keep that higher lows momentum going, and then maybe that'll be the trade to get in. And I potentially would look at that to add to longs if I saw that over the next few minutes. Let's have a look what else. Rick, dollar yen. Yeah, This one's on a bit of a freight train. So this was my level, 155.70. Didn't do too much on the way up, but look at that. Bang after, it's a level. Okay. This is what I would have liked to have seen in dollar CAD. Break up, hold, off you go. Okay. But this one is doing it in dollar yen. So this was pretty much my last main level here. Not that it was a huge one. We just had a bit of prior action around it. It's all about 157 for me. That's the next level up there. You can take that up to 157.5, 60 up there. But again, this is very, very strong. It's almost going up as quick as it came down, and that's going to have the Ministry of Finance on its toes, particularly if we get back up to the 160s. And there's all big levels up here. I'll have to get on my long-term charts again because there's a big fib, if I recall rightly, up here that goes back from decades. So I'll have to let's see if it's on there. I might have taken them off a while back. Yeah, let me just have a look. I'm talking from these sort of levels. I don't know if I've still got them in play. Let's have a look. Is that one there? Oh, there we go. So that's the exact one. Big level. You can just see it. Let me change the color, make it a bit clearer. So there, 162. Oh no, where am I? There, 163 is. So big levels, fib levels. I'll have to start putting these on my charts again. So don't worry about them too much. But we're heading back up that way at the moment. So up here to 160s, there are some big, huge historical levels going on around there. And obviously this is where they intervened last time. Doesn't mean they'll intervene again. They're all about the speculation, speeds, that sort of thing. This, to me, isn't speculative, though. Okay, this is a reaction function of what's going on in the US. So it puts them in a bit of a difficult situation. Yeah, they could obviously say it's still speculation and intervene for the sake of it. But they are fighting, they will be fighting a different beast trying to intervene this time around than when they intervened last time around. Because, this is dollar strength across the board, not just dollar yen. But also, this is another one that you need to watch if yields are breaking up. If 10s are breaking 4.5%, you need to keep an eye on this one because this could be, as I say, back up to 160 in a flash. And then they might be looking to step in if we get in that sort of volatility. As far as where you go on the dips, again, you've got to be careful where you want to maybe look to buy a dip, because if you get a pullback because something's changed, then it's potentially going to be quite hefty. 155 is probably the level you want to keep an eye on. If we're breaking back below there, then maybe we are going to put in a short-term top or otherwise. Other than that, we've got a bit of a level here, 155.60, and then against this low here, 155.30s. But this is all small beans, in my opinion. So stick to the big levels in that. Angela says those trade setups where you'd be generally extremely surprised if they didn't play out, those are the ones to take. Yeah, exactly. There's just times, as I say, with experience, you just think this is going to happen, no matter what. Gold, Devesh, I won't forget you, my friend. Now, I've set myself, my charts by now. I've got a lot of, like the hourly chart, I've been drawing these lines as we came up, loads of little lines here, whatever. I've actually redrawn a cleaner chart, okay, because again, I don't have the confidence in some of these little piddly lines, these short-term lines. So I've done a cleaner chart, just highlighting where I think the stronger levels are. Okay, so we've got one here, 25, 33, 32, 30, whatever you want to call it. Okay, this was a level on the way up. We knocked ahead, knocked ahead, knocked ahead, knocked ahead, got the break. Okay, so these are the levels I talk about, looking for the stronger levels. And that amazing thing has happened where it's actually forming, these levels are formed where these fib levels are as well. So we've got the 50% retracement here, right bang on that level. Okay, so you've got a big tech confluence here. Okay, you've got the same down here. The 61.8 comes right in around this other big resistance point and break point and support point. So there's two main levels here now. I'm not interested in whatever levels are 10, 15 pips right now, all these pissy levels in the middle. Okay, not really interested in all these little bits and pieces because we're getting big, strong moves. So all I'm interested in is the key levels. So that's either down here, 25.30s, or it's up, back up towards this 38.2, 25.90, 26, which again was another level all on its own. So you've been trying to fight gold all the way down here, then I've got two areas where I would look to potentially trade it. Okay, 1, 2. I don't need to have 10 trades in this to try and catch a knife. I can have 2 trades. And if they're wrong, fine, they're wrong. But I know I'll only lose a little bit if I am wrong. So yeah, I might have a little go down here myself if we see it 25.30s. And we've not been too far away. 36.8 I've got as a low at the moment. So we've had one look. If we get another look and it holds, then I might have a go with that myself. 26.50. It's hard to see 26.50 at the moment, Angela. Is it corrective for a retest? I'll probably go into my shorter term chart to have a look at that. Maybe 40s, maybe around this area here. It was again just a minor resistance point, but then it became a bit of a support and resistance point. So it's seen a bit of action around there. So it's only 10 ticks off your 50s. Would I look at that? No, I'm probably more would be interested in 26, 70, 80. Again, the bigger levels where we've had decent rejections, price action around it. So that would be my marker for any bounce if we got a bounce from here. But no point in worry about any of these levels, 26.20s, until we get back through here, 26. So that's my initial main level above in the meantime. And just see what develops. We might get up to 70s and hold it, and then that becomes a level. But my main levels are there, maybe there, and then up to there. So 4 points where I think the price may do something. Oil had a little bit of a bounce, got a little test of the zone down here. Mark's going to tell me off for looking at the continuous contract instead of the futures contract. I don't care, Mark. You can tell me off. It's easier. It's an easier picture to look at. So we've had a little knock into here. We've had a lot of these little knocks into the level, which is why it's got it as a bit of a zone. But we've had a little bounce on the back of that. There has been a bit of Israel-Iran stuff kicking off again. Iran side, I think, was hoping for a bit of a ceasefire with Trump coming in, and Israel went and did stuff, and so that's all warming up again. Yeah, demand side, there's no reason for this to be shooting up. So again, if you get geopolitical worries that's taking this higher, then you probably want to be looking at the short side once more. Although if this level does hold, again, it is a decent level to balance your risk again for longs. Okay, I won't be buying it at 68, but if you're going to buy it somewhere, buy somewhere that's had a lot of historical action, and you can lean on it. You can trust it a bit more than any other level. So yeah, maybe tight trade down here, 66s, 66.50, and if you're below that low, then it might be breaking. So you can keep it nice and tight. No need to get offside too much. Gavin, yeah, we could come off the range lows here in euro dollar. I'd like it to. It's trading 105.03. I wouldn't be surprised though if we go and take out a few stops under the figure. Maybe down to 90.85, something like that, before bouncing, or we just cleave through it. Yeah, it's really not looking too good down here at the moment. Cable as well, that's looking funky. I said yesterday, if you want to try and catch a knife, this is an area you might want to think about, but it's carved all the way through. So where this one stops is, again, you might as well toss a coin. Got a bit of action into 126, comes in, 126, 15, 20. I know one of our guys, Rick, in the room is looking at that area. Yeah, it's valid enough. It's got enough touches along here that it's a level. So again, if you want to try and catch the knife there, be my guest, but you don't need to be wrong too much if we're breaking below that level as well. Okay, so I don't want people to get in trades and be 100 pips offside thinking, yeah, it's going to come back eventually. Okay, we've carved through everything since we had this break of 128, 40, 50. We've come through absolutely everything. 128 was a solid level, hardly blinked. Okay, so just know the markets you're trading at the moment. Okay, it's very, very dangerous. It's not giving you any ins, not giving you any outs, except unless you're hitting your stops. So if you're not sure, sit on your hands, wait for the price to develop, wait to get a bit of action like this where it stops going down, or a bit of action where it bounces and then you find that old levels start holding again. Okay, that's when you get your conviction that you found a bit of a bottom. Okay, we're seeing none of that here at the moment. Looked like it was slowing down here and then voila, off it goes again. So this could be going to 120, could be going to 115, it could be going to 110. No one knows. All you can tell by is when it goes through the levels and whatnot. I know some of you guys like dollar Swiss as well. Here we are, just nicking above the 61.8 of this whole move. Been a long time coming for a lot of you longs and a lot of longs in our chat room. So good luck with that one. Good to see you finally getting some rewards for sitting on the trades down here for long enough. This was a bit of a euro sterling type pair. Significantly, we've broken above this level here, 88.20. So that would be my main marker now for any reversals, retraces. If you get down there and hold, then you might be off and running again. It keeps the momentum going for this trend. Aussie Kiwis getting back up as well. Another one I've been short. I've been chopping and chopping, slicing and dicing. So we're back up at my sort of first entry area. If we go back up to this high, though, I would be concerned that we're going to get a break because, again, lower highs coming in, not straying too far from the level, coming back to it quickly. It's all the price section that tells me that at that point it might be the time when it moves up and maybe goes back and has a look at this high. So I'm keeping my eye on this one as to whether I add back or maybe wait until we get a move up here and then add back to my position, just looking to slice and dice a bit while keeping a core short. So that one I'm also keeping an eye on. You got any others, boys and girls, before we call it a day? Any other bits and pieces to look at? Just going to go through the chat and see what you're all up to. No, you're all looking pretty good. I'm not sure what else to look at. Euro sterling. Not had much interest in this after some of these moves. We have had a little half-hearted test down at the figure and it's holding, but this one's still being dragged around by what's going on in all the others. Euro sterling, euro dollar and cable. Aussie, another one crap in the bed. For me, the level down here at these lows, 63s, 63.5, 60, that's probably about the only place that I would potentially look to trade it if we get down there. At some point, yes, some of these moves are going to reverse, okay? But where that is, I don't know. So pick the places where it might be most likely. We had a lot of action down here at this 63 level. So it's where we've caught a knife previously. So that's where potentially is a good place to catch a knife. Unless this is the monster dollar rally from hell, shall we say. Last one, I'll look at stocks quickly because I know you boys and girls love looking at your S&Ps. Oh, where am I going? Into there. No, wrong one. Oh, come on. There we go. So we were doing this earlier this week, Tuesday, I said, be careful this level here, okay, because it's shown up. That's where you want to look. And remember, I lobbed this line in. Well, we've gone up there again, and we've held it again. After that move, though, we got a hold of support as well before we move. So we've got a range. And again, this is a perfect example of to take this to any other, this pattern to any other pair. Take it to cable, take it to the euro, dollar, whatever one's falling out of bed, shooting through the roof, dollar yen. This is how you can watch the price action, and it tells you where the market for a period of time has had enough. Okay, it's not going down, but it ain't going up no more. So you know where your pain points are now. So if you want it to be long, this is a level you can try long. If you want to be short, this is a level you can try short. If you're breaking that and that prior high, you're wrong. Okay, if you're long off here and we're breaking below there, you're wrong. Okay, you don't need to be wrong by a huge amount. Okay, or you take a long and, you know, off you go, and vice versa. So it doesn't matter what your bias is, which way you want to trade it. You want to see this price action building up. That tells you how you can get into a trade and what the price has to do next and what direction is next, depending on which level breaks first. But for now, a little bit of sideways action, a little bit of indecision. And as we say, go with the flow on that one. Right, enough waffling for me. Christine, I'm not sure what time Power, let's see if it's on, it should be on here. What time the Powster is. I think he's in the evening. Oh, we got Lagarde speaking as well later on. Bailey too, they're both in the evening. Williams, when's Powell? When's Powell? I can't see him. I might be going blind. There he is, 8 o'clock our time. So just after Lagarde. So that's 8 o'clock UK time, London time, that number. So that's 10 o'clock European time, and God knows what time it is UK time. So there you go. So they're all, I'm not sure if they're all at the same shindig or different ones, but they're all speaking close together. Bailey's speaking again as well. Williams after. So there's a whole clutch there. Would have been my evening. So that's when they're all speaking. Right. Thank you very much, everybody. We'll call that a day for today. Friday tomorrow. Whoopee! Can't wait. Absolutely knackered. Let's see if euro dollar has managed to survive the day. Have a great day's trading, everybody. Stay safe. Thanks for coming. See you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.